Hi guys, my name is Tim Froude. I'm President and CEO of Sokoman Minerals Corp, a gold-focused junior operating in the jurisdiction of Newfoundland and Labrador, Canada. We've got a handful of gold projects, but right now the focus for us is advancing our Moosehead gold project from a drilled stage property to the next phase for us is actually going to be bulk sampling in 2025, which we're really excited about. It signifies the property is growing up. And being a high-grade property, of course, we're expecting good things to come out at the end of the drum. So look forward for updates on our bulk sampling starting as early as June or July. And there'll be 2 samples, and I'll get into that in a little more detail later on. Thank you.
Hi, I'm Jeff Wilson. I'm President and CEO of Precipitate Gold Corporation. Precipitate is a company focused on early-stage exploration in the Dominican Republic primarily. We've got 3 projects in the Dominican Republic, all of them owned 100% by the company, one of which is adjacent to and surrounding Barrick's world-class Pueblo Viejo mine. That's a project that Barrick spent $7 million on in an earn-in agreement. We've now got that project back 100% and are reevaluating that project. But our primary focus is a project called the Wanda Herrera project, which is adjacent to Gold Quest Mining's Romero project in the San Juan district of the Dominican Republic. We've got multiple targets there that we've delineated over several years and are currently advancing a number of those targets now towards a drill program hoped to be executed later this year.
Gentlemen, good to see you again. Tim, lovely to see you, Jeff, as well. Look, we're going to talk today about the challenges and the opportunities of working in a high-priced gold environment after sort of 4 or 5 years of very challenging equity markets. So, Tim, we're going to start with you. So, have you had to sort of adapt your capital raising strategy in this cycle?
Absolutely, Matt. And just for record, we're starting this field season really because it is now we're getting into field season time here in Newfoundland with approximately 1/3 of the treasury we had last year. So we have to do basically the same amount of news generating work with 1/3 of the capital. So for that reason, we've trimmed back our exploration drilling on Moosehead specifically to focus on the bulk sampling, which is coming up. We have enough cash in the treasury, about $1.5 million to cover the cost of our first bulk sample, which will be a conventional bulk sample. But as I mentioned, in the meantime, our other projects are basically sitting dormant other than care and maintenance for now. So yeah, I mean, it's you could argue what is the most important challenge for juniors, and right now for us, it's definitely cash and trying to balance moving things forward with maintaining a sound treasury.
Well, explain why you think because I think people like to talk about valuing companies through the drill bit. Are you putting out good drill results, nice headlines, etc.? You're looking at the bulk sample as an opportunity to generate revenue or show potential? What's the purpose of it?
Mostly for potential, and I'll get into the revenue thing in a bit more detail later. But right now, you need to bring this to the next level, and I think we're the small fish in the pond if you want to compare us to, say, Newfound Gold, our neighbor over the hill. But in terms of I'm sorry, I lost the question.
Well, it's really I'm just what I was trying to understand is why people change their models in markets like this, and obviously rather than continue to drill, raise money to drill, you said actually people seem to be rewarding companies that do bulk samples, and I just wondered why you thought that.
Well, exactly, and for the record, in January, February, we put out actually some of the best drill results we've put out in the past couple of years from the Western Trend, which is where the focus has shifted from the Eastern Trend and footwall splay and other areas. And just to remind people, we've got 7 separate zones of high-grade gold mineralization identified on this property. They're all kind of floating planets in space, kind of circling around the Eastern Trend, but yeah, we just had to decide. I mean, where do we need to bring this? And I think to attract a mid-tier partner, I don't think we're going to be in the realm right now to attract a larger fish or the large fish, but certainly to get a mid-tier gold producer around. We've seen Calibre come in. We've seen Equinox Gold take over Calibre. So the fish are starting to get in here. And how do I make my company a little more attractive? Because I'm not a miner, I'm an explorer. I could become a miner, I guess, if I had to. But right now, the focus is on getting this first bulk sample in and out of the ground, establish a good, strong grade, for it and demonstrate that, yeah, you can get gold ounces out of the ground here quite successfully and efficiently.
Well, Jeff, you've had the same sort of challenges. You're saying, well, what's the best allocation of capital? And you happen to be lucky enough to be sitting a lot. You actually looked at Newfoundland at one point.
Yes, and I think Tim just used a word that I think is key here as it relates to our industry and accessing capital, and it's focus. I think that is one of the things that in a market like we've been in over the last couple of years, you need to be focused, and the capital's not there to be poking around on multiple different, projects in different parts of the world. You sort of need to pick your horse and allocate capital towards the thing that you think has the best return on investment. And so for us, we were fortunate that we had two things that worked out for us. One of which was we had an earn-in agreement with Barrick, where over the last 5 years, Barrick spent $7 million of their money on one of our projects, which quite frankly at the time we felt was sort of our secondary asset, to be quite frank, but it was proximal to their mining operation. They were looking for expansion and of course additional feed, and so we saw a lot of good work conducted by a major on their dime, and that certainly helped us get through the last couple of years. But on top of that, as you know, Matt, we also had some very strategic ground because of its location. They needed it for infrastructure, and we sold them some sterile ground for $5 million US. And again, that was a non-dilutive capital raise for us that allowed us to strengthen the treasury and get through this. Now, that's not the kind of thing you can just orchestrate. I mean, there's a whole lot of good luck involved in that, no question about it. But we also saw the strategic merit of that ground right from day one in 2018 when we entered into acquiring that ground. So again, I come back. I think focus is key, somewhere where investors can see a return on investment, because the market we've been in the last couple of years has been, gold at $3,300. I think we all would say, you've asked us 5 years ago, would we be happy with that? We'd be thrilled. But investors are still looking for more frequent return on investments. And I think a lot of us, myself included, and I'm sure Tim, have sort of seen kind of sideways patterns in our share prices over the last couple of years. And so although gold has done well, how do we start to reward investors so that money that comes in equity financings turns into gains that can then be redeployed back into the sector?
Well, I think investor sentiment it's been erratic, should we say, because people haven't quite known where to look. Early on, you'd expected there to be a reaction by the gold price. There wasn't. That's come in the last 18 months. People haven't known how to behave, and there's been a lot of, damage done with the relationships with retail investors and juniors. So how are you reading investor sentiment now? What do you think they are rewarding, Jeff?
Well, I'm starting to see them rewarding drill results. Very recently, I think I've started to see some share prices on a few companies that I watch that have seen, a little bit of traction on the back of positive news. That's a good start. I think and I've actually seen some financings getting done here over the course of just the last couple of weeks, and some of those have been upsized. So, I'm sensing, even though I'm not necessarily tapping into the equity market right now because of our current treasury, I am seeing news releases come across my screen from peer group companies that are getting financed. So I think investors, again, are getting very, very specific. They're looking for, size potential or development stage or advanced stage, like Tim's talking about, where people can start to see a bit of a finish line beyond just, an exploration play.
Right. Okay. And Tim, just looking at you, coming back to the bulk sampling, I guess a couple of things there. You've received some provincial money, mineral incentive program money in here. So the government's obviously interested in encouraging companies like yours to do what they do, explore. You've got investors looking at this bulk sampling plan at Moosehead. Do you think the government understands that? Do you think investors understand the reasons and rationale behind it? What are the alternatives? What else can you do to get noticed?
Yeah, well, you know what? With respect to the shareholders, some do, and it's amazing because I do tend to interact with a lot of shareholders. for good or bad, my email address is attached to every press release instead of info at Sokoman. So I get a lot of direct feedback from some pretty engaged investors, and it's amazing how some of them feel towards, oh no, you put the bulk sample aside, go for the deep drilling, right, first, and this kind of stuff, and I see that. And then you have the others that say, yes, can't wait to get the bulk sample out of the ground and see that yellow metal and all that sort of thing. But just to get back to my initial comments about 1/3 of the treasury, that's partially self-inflicted as well, because when you're trading at 4 cents, how deep down that well do you want to go at 4 cents? And then you've got people who are criticizing you, and rightly so, for selling too many shares too cheaply. We try not to do warrants. I don't think our last financing had a warrant attached, so you get away a little bit with that. But it's such a balancing act. And yes, some in the market do get the strategy, and some don't. But that's just the way it is.
But you talk about 130,000 meters having been drilled at Moosehead, right? That's good going, right? People want to sort of maybe start to understand the economics. There should be enough data that you can leverage towards putting some sort of resource or economic decision around this.
And I agree with that. But as I mentioned, we've got 7 zones. So, it's not like we have one continuous zone with 130,000 meters on it. We've got, I think we saw that problem with, I don't know if you want to call it a problem, but I think we saw the result of what the market thought of Newfound Gold coming out with their maiden resource. I think a lot of people were expecting something different. They got a lot of pearls on the necklace there, sort of thing, to use a term. And I understand that because I'm chasing the same target, right? So, and the market didn't receive it very well, unfortunately for them. I think the story is not even a quarter told at Queensway. Here's a plug for them. I'm a shareholder, so keep it up, guys. But anyway, 2 million ounces is not a bad start, right? And sometimes we're a victim of our own success, and I'm not criticizing them, but, a lot of great results came out of Queensway, as did a lot of great results come out of Moosehead. And people's expectations are based on visions of like our second last press release was 70 grams over 4.5 meters. A couple of years ago, your stock would have been flying, right? We didn't budge. So, sometimes you're a victim of your own success, more of the same, or, whatever, try something new or whatever. But, it's
an important point you make, Tim. If you look at Newfound Gold, it was 2 million ounces, all categories, about 2 grams per ton. I think expectations have been set somewhere else. So the comments that I get thrown at me,
and the grade, not just the ounces. You're right, absolutely. The grade was a bit, I think, deflating for people, but
it's a good that in itself. If someone came out with those sorts of numbers and said, "Right, I've got 2 million ounces at 2 grams," you'd be like, "Nice project." The trouble is, perhaps they'd run away with it stuff. But are there any lessons to be learned for companies like yourself? Because you're like you say, they're just over the hill, as it were. But are there lessons to be had?
Don't do a 43-101 until the very last minute. No, I'm just kidding. But one of our shareholders actually told that to me. Don't ever do one. And I won't say that person's name. But anyway, what do you do? You can't please everybody. So, we chose the path we chose. You could, if you want to compare apples to apples, 650,000 meters versus 130,000 meters, 2 million ounces of gold. What's the bottom number missing on ours? Sort of thing. You could do the math quite easily, right? I'm not suggesting anything, but people do that, and people do that all the time. So, but it's on my shoulders, really. So I'm responsible for it at the end of the day. And the path we've taken, I think, is the right one. Some people may call it too slow, whatever. But I'm not a overzealous guy, I guess. Maybe that's a fault.
It's a very fickle market, Matt. I think Tim's right. You can't please everybody. We all know that. And as a CEO of a junior company, every move you make, good, bad, or indifferent, somebody's on the other side of the equation criticizing you. So, that's the nature of our business. We accept that. But I think, I think having long-term focus and sort of, making a decision internally as a company that isn't going to please every shareholder, but that you believe is in the best interest of the company and the shareholders. And that's, tricky because it is such a fickle market. So, and again, the market is sort of, to go back to the, what works or whatever. I mean, the market's kind of looking, I think, for how many boxes can they tick that to show that something is going to work, whether it's the geology or the location or the infrastructure or the government, all these things are, let's be honest. I mean, and a lot of investors have been beaten up in this sector over the last few years with things that just don't work in spite of, great promotion or great results. And so how do you start to evidence to people that, there's a pathway to real success here beyond, a jump in your share price for a brief amount of time? And that I think requires, longer term thinking and strategy from management to say, look, yeah, the share price might go up, might go down, might go sideways, but what are we ultimately trying to accomplish here? And sometimes you've got to make those tough decisions that don't always please the market immediately, but you believe as a management team are going to add value. And when the market or investors or whatever decide to sort of do the DD to really look into this thing, they go, yeah, these guys are in a good place. And I think that's sometimes really tough because as a junior mining exploration company CEO, you're trying to do the best you can for your share price every day. And so, to kind of be patient is tough. But sometimes I think short-term pain for long-term gain is sort of what can ultimately reward shareholders rather than chasing something every day that ultimately doesn't pan out.
Absolutely, Jeff. And, as our shareholders know, and Matt knows as well, he's known us now for several years, we've only drilled at Moosehead. So maybe it's time to change the script a little bit and throw in a bulk sample to get people excited and just change the narrative a little bit. And like I said, just we can always go back to drilling, but I mean, we could keep drilling. But I think it was time that 2025 is the year of the bulk sample for Sokoman. And I think that's the path I think is best for us. And I think we'll put more eyes on it. It shows the project has grown up. It's not just a pincushion that we're drilling, keep on drilling. That we need to show the next dimension and that it's possible. And what we can sort of mine in a relatively small sample, we're only talking 1,000 cubic meters. And the reason for 1,000 cubic meters is above 1,000 cubic meters triggers an environmental assessment. So rather than wait two years to get all that stuff done, we're taking a modest size sample. And if the grades hold up, I mean, the weighted average from surface channel sampling we did at the proposed site for the conventional bulk sample is just under 6 grams. I mean, if we can hold that grade, we'll do okay. That's not bad for an open pit, all right? 6 grams. So
yeah, and if we're talking about gold, Matt, I mean, here's my hypothesis to some extent here is that I think in a $3,300 gold environment, I've got to think that producers, large ones, mid-sized ones, junior ones, are looking for growth. They're looking to add feed or production profile. They're trying to increase here at these kinds of metal prices. The margins look to be pretty good for most producers. So, I have to think that, in Tim's case, maybe something like a bulk sample draws the attention of junior producers or maybe mid-tier producers to look at something from more of an economic standpoint. For our case with something like Precipitate, relatively early stage, more of a discovery story, can you evidence scale? Can you show that there's something here that a mid-tier or a major, might fit their criteria? So, again, I think that is, as much as, we are not really seeing our share prices impacted by the price of gold, I think the sector may be shifting here a little bit with respect to whether it's M&A or joint ventures or strategic investments from mid tiers and majors. We are seeing some of that stuff already, and so again, as you manage your company, how do you position yourself to potentially benefit from some of those aspects of a rising gold market versus just what do we do to our specifically this round of work or whatever? How do we position ourselves to catch the attention of what could lead to a potential profitable exit strategy for shareholders?
absolutely. And as long as someone's profiting in this business, then there's always the chance that any of those levels of producers, as you mentioned, Jeff, we'll be shopping. And an offer can come out of the blue. Generally, they do for these things, at least in my experience. But so yeah, we hope that that cash is being preserved in some respect, and that they're not just buying their shares back. Buy some new reserves or something like that.
Yeah. Well, I mean, again, I don't follow the major world, incredibly closely, but I have to think that as their margins improve and their profit improves, the shareholders of those mid-tier major companies are probably not just looking for, they want to see that cash going into something that creates growth. And either mid-tier major companies are going to go running around and spending their own money in exploration, which they could that's not really their wheelhouse. And so that's a lot of money that could just be burnt into the ether, or they can start looking at things like strategic investments into exploration companies, looking at, acquiring projects that if somebody's already found a couple of million ounces, your return on investment of acquiring it versus going out and trying to explore for it yourself is often, there's a shorter path. So I think, increasingly there's the potential that producers start to get pressure from their investors in terms of what are we doing with this increased cash to create growth for me, versus, like you say, Tim, buybacks or even dividends to some extent. I think paying dividends is great for investors, but it doesn't necessarily grow the company. So I think you're more likely to see majors maybe, deploying that capital into growth in the form of, M&A or strategic alignment.
Yeah, I found the market fascinating for the last 5 years has been great, but specifically the last sort of 12, 15 months, where we've seen companies actually really having to think long and hard about how do you generate value, especially non-producers. Because producers, I get it. We're talking about gold here specifically today, guys. Gold producers making out exceedingly well. The margins have significantly increased. They've got free cash flow. Trying to work out what they do to their balance sheet. Do they do M&A, share buybacks, dividends, whatever? But for the juniors, the smaller companies, like yourselves, put you in that, you're having to think a little bit more carefully about, how do you get noticed? What do you do which actually genuinely, with not a lot of capital, delivers some kind of impact? Because we've seen different models being employed here. So you've got companies like NGX, they're just drilling like crazy. I think they just put out 1,600 meters at like practically 0.9 copper equivalent. You've got you've got companies like, so they're going to keep drilling because that's kind of working for them. You've got companies like, I think you obviously mentioned Newfoundland Gold, and we talked about the fact that they've finally put out a resource and put a PEA around that. They're going to have to do a lot more work around that. They're also going to look at bulk sampling, as I understand it. You've got companies like Magna also doing bulk sampling. That's going to change their fortunes significantly in terms of their profile. Companies are having to think differently. It's not a case of drill anymore. I don't think that works for every single company. It will work for some companies, but not others. So you're going to have to think, very carefully about that capital allocation. So, just coming back to you, Jeff, with regards to your work at Juan de la Hera, you've indicated that you think drilling is the best use of an allocation of capital for in the market or for yourself. How are you viewing it?
Yeah, I think both, and I think going back to your point here on this topic, I think a lot of it has to do with companies, how they set expectations. That I think has a lot to do with the market's response to what a company does. So whether it's drilling or bulk sampling or acquisitions, I think a lot of it has to do with what do your shareholders own your stock for? What is it that has compelled them to buy your shares, and what is it that they're expecting you to do? And so I think managing expectations by managing expectations is key. And if you lay out a path in terms of why you're doing what you're doing, and you project that message well enough, you're more likely to get the right kind of response if you succeed in your objective versus, hey, we're going to run out and do a bunch of stuff and nobody really knows what it is you're trying to accomplish. So I think, again, this comes back to this point of focus. And for us, I think, we're at Juan de Herrera, we're strategically located adjacent to, a 3.5 million ounce gold equivalent deposit at Romero. That project is advancing through development and moving toward environmental impact study and a feasibility study, with the hope that that can move towards production. And so from our case, part of our story is to, we're in the same geology, we're along the same trend and share a concession boundary over 40 kilometers. How do we position ourselves ideally to identify meaningful mineralization on our side of the claim boundary, but also position ourselves to have prospective targets in the proximity to what looks like is going to be a multi-million ounce producer. So again, there's an argument to be made that we've got all these prospective targets. Don't kill them, right? But we're more of the belief that our team is based on exploration and discovery, and so our objective is to go in and delineate these targets, prioritize these targets, and then systematically drill these targets based on where we think our best shot is. And I think that's what our shareholder base understands we're doing. No question, there's always pressure. I get emails, like Tim mentioned. I get emails all the time. When are you going drilling? Where are you going to drill first? We need to relay the fact that, look, there's a lot of work that goes into determining where our best shot is. And if we just go running around willy-nilly drilling targets because, we've got a permit, and, we have a really strong potential to sort of blow ourselves up. So again, we need to be systematic about it, focused about it. And when the time is right, feel as if we're drilling where we think we can have the best success.
Just to that point, you make a really good point about setting and managing expectations so you attract the right sort of investors. I think, there's a great example in Amex Exploration. Last September, they put out a PA, their stock halved. It's an amazing project, high-grade project. But when they put out the resource in the PA, it wasn't good enough for the types of shareholders that they had. So the fact that it's hugely economic and will get into production sooner was not what people were expecting. Personally, I'd buy into it. But for others, they're thinking this is going to be super, super high grade, super, super big, and that's the model. We're going to drill. So it's a tough one. And I mean, Tim, for you, there was a little bit of in the shadow of Newfoundland Gold for your project, wasn't there? And when they started faltering a bit, maybe the shine came off your story a bit. I mean, would you say that's true, or do you think you can be masters of your own destiny going forward?
Well, I agree. Yes, and this is not in any way a negative or a slight on Newfoundland. We were definitely second fiddle based on 12 drills versus 2 drills, and all the hype and everything, and it brings up Jeff's excellent reference to managing expectations. I think maybe if I had blown the horn louder after hole 1, we could have gone to $3. Therefore, we would have fallen, exponentially the same percentage to where we are now, and be 20 cents instead of 4 cents, sort of thing. But yeah, I mean, we're also explorers, and Jeff also brought that up too. It's what I've done. I mean, I've never been a miner. I've been inside of mines as visitor, but I've never opened a mine. In fact, this will be the very first bulk sample I'll take. So I'm nervous, I'm cautious, I'm excited, all at the same time. But I do believe that we were running out of rope with respect to drilling at Moosehead, except for that deep target. And we have a consultant, Dr. David Collar. He's brilliant. He's a genius, and he doesn't do things in a hurry. So he likes to get everything he can in the can before he shakes it up and see what comes out of the end, sort of thing. But we are very close, and I'll tell shareholders that who I've been telling this for some time now. These things are it's like trying to map out a lightning bolt in the sky. I mean, these high-grade nuggety quartz veins are all over the place. We are seeing some. We did learn a lot, obviously, from the Western Trench that we exposed for the first time ever high-grade gold mineralization. Believe it or not, the property was first discovered in 1987. 38 years later, the first high-grade vein is actually seen in bedrock. So, I mean, we have that challenge as well. So, but I do believe that, we were running out of rope with respect to drilling. We will drill again, trust me. But right now, I think we need this intermediate step to change the focus, change the tempo, maybe get some bigger eyes on the company other than new shareholders. Not that there's anything wrong with having new shareholders, but I'm talking about a shareholder with its own revenue, like a junior mid producer or something like that. And I think this will help that. But we are not by any stretch of the imagination, abandoning the deep drilling, because the model we're chasing, as is Queensway, Newfoundland, the Fosterville model, which I've been very fortunate to have set foot in the Fosterville mine before it became what it is today. That high grade producer with the Swan Zone, beautiful, triple digit grades and things like that. I do believe that potential is still here at Moosehead, because I see all the other similarities. The geology is the same. The structural setting is the same. We just haven't drilled much below 400 meters. And Swan Zone is 1,200 meters down. So if you look at that, we've got 800 meters to go. But I don't think so. I think, there's been some uplift, because we do see Swan Zone grades at surface. So how did they get there? Where's all the low grade sort of thing? Well, there is low grade around, obviously, in the wall rocks, but in terms of the veins themselves, and we know we're on a big structure. We're on the same structure as Valentine, right? 5 million. I think there's 15 million ounces of gold there, just my personal opinion. And it'll be, one of the biggest gold mines in Canada. And we're sitting on that same structure. So we know we can go deep on this. It's just a matter of, those are expensive holes. They're also, high roller type holes. And, if the dice don't land the way you want them to, you're snake-eyed, right? So I want to make sure that when we do that we're putting, the best case forward for those holes. So there will be deep drilling, but right now, the focus is on getting this bulk sample out of the ground.
Right, and who do you hope to get on board? Because right now, if it kind of, as obviously you said it yourself, it's sort of financially constrained or trapped asset, whatever the phrase that people like to use in a tough capital market. You don't want to blow your brains out raising too much money. But the type of investor, is it just a balance sheet? Someone with cash? Is it a strategic who's got the same view as you have, that there'll be a consolidation in the district for projects like this? Or do you think you're going to need to sell it to someone as a potential standalone asset? What are they buying into?
Well, I think all of the above is possible. I do believe that there are, and no disrespect to Jeff's company, that there are too many of us out there right now trying to tread water in that pond. We're all in. I do believe there's room for consolidation in central Newfoundland, and that's what I'm specifically talking about. There are a lot of companies there that are trying, but I do believe, and I think pretty much all of us have one common shareholder, which could help facilitate something. Would I consider, a JV with, or a merger of equals, or one slightly above the other, whatever? Absolutely. But who makes that call first?
True. Okay, Jeff, let's talk about that. I think the Dominican Republic engine has started up again. So do you think it's still a sort of got a question mark over it as a gold copper jurisdiction, or how would you frame it to North American investors?
Yeah, I think there is still some questions to be answered by the government and by some of the local communities that are also, as happens in all parts of the world, a little concerned about mining in their backyard. But yeah, I think that and again, this comes back to focus and strategy. We knew that the perception and the outlook from the market for the Dominican Republic was not favorable, while our neighbors were long awaiting this green light to be able to take their project through development. Upon receipt of some positive signals from the government back in October, the respective share prices started to move. The market understood that, the pathway had been cleared a little bit. And so that was a time for us to start to deploy some capital and start to, increase our work programs and get boots on the ground. Again, relatively low level stuff, just indicating to investors in the market that, we felt more comfortable, and therefore we thought there could be a return on investment on doing prospecting and mapping and those kinds of programs. We did, and we saw a favorable response in the share price. And so, and I think, look, as a measuring stick, GoldQuest share price has gone from 10 cents to 60 cents in the last 12 months or so. And, and so I think that's an indication, granted, they've got 3.5 million ounces gold equivalent, and they're moving towards development. So they're seeing value, but they're also seeing investment from, this is, I think, quite interesting as it relates to the jurisdiction. and the market's comfort with the jurisdiction is GoldQuest has completed 2 rounds of financing in the last 6 months that has been exclusively subscribed for by Dominican investors, wealthy industrialists within the Dominican Republic. And the first was a $8.7 million financing at 16 cents. And then that same group came in just a couple of weeks ago and put an additional $15 million in at 50 cents, 50. So the share prices responded really well. These investors who I would argue, or I think the perception is, know the country better than anybody, know the business environment of the country better than anybody. If they're comfortable investing $23 million into GoldQuest to assist GoldQuest through, or at least partially through, the development stage, that's a very strong indication that, you know, people in the know in this country believe that there's going to be a positive outcome. And these are not penny stock investors. These are probably barely mining investors. These are very wealthy individuals who aren't doing this for a quick flip. They're doing this because they believe that they're going to have an interest in something that's ultimately going to produce gold and copper. So the benefit of that for us is that's a great advertisement for us with respect to, you know, what can be the outcome of being a successful explorer in the Dominican Republic at this point in time. And I think that has the potential to draw more investor interest in both companies. And as I said, we've been waiting for sort of the environment, market-wise, the environment to be such that we feel comfortable that if we deploy money on something like a drill program, we're going to see a return on that investment, because there's no point in throwing money, you know, into the dark and hoping that somebody's going to care when you know they won't. And we're getting to a point now where we feel like there's an audience, we feel like there's a receptive audience for exploration in the DR. And now our focus is bringing along several of these targets to a point where we can drill them, and hopefully with a bit of good fortune, generate some results that can be rewarded.
Yeah, absolutely. And if I just can add for my region, the same thing. The government are predicting exploration expenditures in our little island of about $250 million in 2025, which is, I think, was about 180 last year. So, like you said, I mean, the fact that money is pouring in and increases in value every year, I think sends a very strong signal to the market that this is a good jurisdiction to invest in. I agree.
Can I just ask about the type of money that's out there now? Because that's the other kind of big move we've seen, is that people are changing their business models to trying to be more relevant. Early stage developers are trying to pitch themselves as advanced developers, near-term revenue generators. Explorers are sort of trying different ways to attract different types of money. We've been seeing people bouncing around Asia, the Middle East. We've seen some companies able to attract mid-tier or major money into some level. Like you've obviously got the Barrick, for instance, situation, and strategics being people with money with a little bit of an idea, and then there's just money, family office type situations, government money. I loved the Troilus deal recently, where they've gone basically trotting off to Europe and selling the copper component of their gold project to fund everything else. So everyone's starting to be a little bit creative at the moment. I mean, where do you think the shape of the market, the investment market, has changed, will continue to change? Will retail ever come back? What do you reckon, Jeff?
Yeah, you sort of stole my thunder there. I think retail is a really challenging beast right now. And, there's a lot of, sort of the pro world out there, if you will, with respect to, brokers and quick flips and trades and clipping a couple of points and making a couple bucks and moving on to the next one. And it's really tough to find long-term investors that sort of understand what management's trying to accomplish and are willing to give management the time to try to accomplish those things. And we all know in exploration, nothing's a straight line. So, what I think I'm going to find tomorrow is probably not quite what I'm going to find. And therefore I pivot and we go. So you need investors that understand and recognize that reality of our business. And so I think the investment audience for what we do is kind of shrunk. And it's certain, sort of mining focused institutions who can kind of understand the technical merits of a project. It's, you mentioned strategics. We're seeing, again, I think part of this world where gold is doing what it's doing, strategics are, major companies, mid-tier companies are realizing we need to facilitate exploration in the junior space so that these guys can find something we might want one day. So you're seeing, companies like Agnico and Centerra and, others, putting money in equity or in strategic alignments with juniors to help keep the exploration machine going. Otherwise, we're going to run out of supply. So, yeah, finding people that want to just buy in the open market, boy, that's probably, I don't know if it's ever been as challenging as it's been over the last several years to do that. And so, yeah, again, you have to be focused in your marketing, in your targeting. If you get on a plane and fly to Europe or New York or wherever to do some marketing, you've got to be pretty focused. Otherwise, I think you're just throwing your money away. So, yeah, very, very challenging. And I don't know, like, again, this all comes back. I mean, I think we need to see I'm not saying anything all three of us don't already know. You need to see a few success stories here where Joe average retail investor makes a bunch of money. And maybe outside of Great Bear and a couple of other stories, it's been tough to find those kinds of stories in our space where, cab drivers are talking about the money they made on a gold deal, and we just haven't seen that kind of, trajectory on share prices and, even the takeovers. I mean, I'm being a little bit critical here of the sector. Even some of the takeovers we've seen, I'm making up numbers here, but it's a 20-cent story that makes a big discovery and goes to $1.50 or $2, and then toils around for a year or two and then gets taken out at 35 cents. Does everybody really make a whole bunch of money? Not really. So it's tough, I think, to get that retail audience, that greed factor where people see that, even $10,000, $20,000 will bring about a return on investment. Right now, the precedent is that hasn't been happening. So investors are on the sidelines, I feel.
Yeah, beautifully said, Jeff. And, I agree with the retail side of things. I don't know if they even exist anymore, really. And, the mom and pops out there that drove the Voisey's Bay rush, I mean, a lot of people made a lot of money there on a lot of different stocks. But right now it seems to be very selective. And, here in Newfoundland, Jeff, I think part of your question, Matt, I think a part of your question was, where do you think the money is coming from? I think a good sign for me here in Newfoundland is that we're seeing the Eldorados and the Equinoxes come here spending, quite a bit of money. And we're a small area, so I mean we don't have the same mining background, especially in terms of gold. I think the gold story is still not fully realized here. Valentine obviously has changed a lot of that, and then Newfound, of course, with their obviously their excellent intersections and their marketing. Certainly drew more eyes on the area, but I do believe that we do need to keep those medium-sized companies coming in to grease the fire, if you will, or grease the wheel and keep things going.
Well, gentlemen, I think that's been an excellent conversation. It kind of felt very authentic in terms of some of the challenges that you've been thinking about and solutions for how you kind of work with the market or even against the market in a funny way, just to kind of get noticed, because there's a lot of white noise out there from groups who perhaps have run out of ideas, run out of money. So I appreciate that insight. But look, I tell you what, in case it is in danger of sounding all doom and gloom, give us reasons to be optimistic. I'll give you a minute each on each of your companies and maybe why people should be looking at your projects. I mean, do you want to go first, Jeff?
Sure. Yeah, well, look, Precipitate is, I think, in a very favorable place. We've been fortunate enough, as I said earlier on, that we've got a significant amount of capital. I mean, relatively speaking, we've got about $4 million in the bank, totally unallocated and discretionary. We own all of our projects 100%, so that's money that we spend as we see fit. We've sort of reshifted our focus towards our Wanderera project that we've felt for some time has kind of got our best shot. We're adjacent to an emerging project that's moving towards through development and towards production. in a jurisdiction that I think is showing itself to be favorable to mining with respect to certain government moves. And we've been sort of an early adopter, if you will, in this country where we've been there for 12 years. We feel strongly that we've got some of the most prospective ground. And we're advancing multiple targets towards a drill program, hopefully later this year. So I think we're in a good position. Our share structure is sound. We've got a couple of sizable shareholders in the form of Barrick that owns about 13 million shares. Strategic Metals here in Vancouver owns about 20 million shares. And so, relatively tightly held, well-held share structure heading into a drill program later this year in what I hope is going to be continuing to be a strong gold market.
Excellent summary, Jeff. The future certainly is bright for you guys. Well, Sokoman, I think, as I stressed a couple times in the presentation, is I think the time was right for Sokoman to move our flagship property ahead. We could have kept drilling, but it would have been more of the same. And we have seen what even putting good drill results has done in the market. It's like we've stalled. And I think taking the next step to do a bulk sample, two actually, this year. But the first one I think is the one that I'm looking forward to the most, as I think it will, for the first time, put a new face on Sokoman. And at our current share price, I think there's plenty of upside, and we're funded through to take this first bulk sample. We're not abandoning the deep drilling. I do believe that there are more successes, more discoveries to be made on Moosehead, and not to mention our handful of other incubator properties that we're nursing along. But right now, I think it's probably going to be our most exciting year at Moosehead. And I think the best is yet to come, both in terms of what the bulk sampling will produce, and as well, when we do get around to drilling those deep holes that I know a lot of our shareholders are wanting us to do, we will get to those. Just be a little more patient, please. Thank you.